Hello everyone, George DeSantis here with the look at the market for the week ending December 16th, 2016. Let's take a look at the disclaimer before we begin to look at the charts. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's begin by looking at the monthly chart of the S&P as we usually do. Here's the monthly chart we usually look at of the S&P 500. And it's obviously very bullish. We're still in a bullish mode. The Kalman filter is above the instantaneous trend line. The parabolic dots here are below the many of the recent bars. I mean, going all the way back to probably around July. So there's no indication to reverse this uptrend here. If we look in the middle of the chart, we have MACD now in positive territory. Not by much, but 5.73. So the bulls are in charge. You can see that the fast average crossed above the slow average. And at the bottom of the chart, Elder Force Index, the 13 period, which is really, in this case, 13 months, is trending up. Broke above this trend line here. So the monthly chart remains very bullish. We broke out of what one might call this new trading range here. You can basically see that there was a little bit of a trading range here, and we broke out of that. Are we going to pull back into that area again? One never knows. But let's see the weekly chart in order to get some better read on that. There are many people who say, well, why worry to look at the monthly chart? Well, the monthly chart, as I understand it, especially from reading Alex's work, it's like the tide. We don't want to be swimming or rowing against the tide. You know, we want to know, is the tide coming in or going out, to make it easier to maneuver or canoe or whatever. So let's take a look at the weekly chart. Here's a look at the weekly chart of the S&P 500. We can see right here that the Kalman filter crossed above the instantaneous trend line, as we saw some weeks ago, 5 weeks ago. And the parabolic is below the most recent bar, so there is no indication to reverse this trend. I am particularly impressed with the angle of ascent of the Kalman filter. It means the momentum is pretty strong here, and we can see it reflected down here in these other indicators. For example, Williams percent R is above 80%, it's way above. So the momentum is pretty strong. And RSI 12, having entered an uptrend here, crossing above 40, bounced off of the 40% line and is above 60%. MACD is in bullish territory with the fast average above the slow average. And all of that augurs well for a bullish scenario. There is no reason to be concerned about this trend right now. On the other hand, one little caveat at the top, perhaps not so little, at the top of the chart here, we can see that last week we had a doji. Some people call it a spinning top. But in any case, it's an indication of uncertainty. So the market could see a pullback here. If we look at a daily chart and see what we find. But the market could experience a pullback here closer to consensus of value, which would be the instantaneous trend line. So let's take a look at a daily chart and see what we find. And here's that daily chart we often look at. It's the 930. I call it the 930 chart because we have the 9 EMA in yellow and the 30 weighted moving average in light blue, the 90 weighted average in the dark blue. At this point in time, we have an ascending triangle at the top of this uptrend. This can be considered a continuation pattern. So it is likely we might get a little more of a pullback here, perhaps to close below the 9 EMA, to close below the 9 EMA. And if we do, given that the weekly chart and the monthly charts are so bullish, in my opinion, we might find this to be another buying opportunity. A close below the 9 EMA, as we had here, could be yet another opportunity to buy this market if we haven't done so yet. Now, we can see that this was a continuation pattern. This flag at the top of an uptrend was another continuation pattern. But the triangle is also one of those, ABCD triangle. Now, somewhere in the middle of the chart here, RSI 12 continues to remain way above the 40% line, and it's above 60 actually. And Williams Pro Buying Power is still way up above the zero line, and it's now trending down a little bit. Percent R is above the 80% line. So all in all, the daily chart is still looking pretty bullish. We have moved away from the instantaneous trend line and the 9 EMA, rather the 9 EMA and the 30 weighted moving average. So we got a bit of a regression to the mean, or back to consensus of value, as Alex Elder would put it. But I don't see why this market shouldn't once again resume this uptrend. We had a few days of a pullback. Let's take a look at something else. Here's another look at the weekly chart of the S&P, rather the daily chart of the S&P 500. And what seems to be happening here is that we're going into a squeeze of the Bollinger Bands. And of course, as we've seen many times before, here you have a squeeze resolved to the upside. Here we had another squeeze, it was resolved to the downside, and then we moved up from there in this squeeze here. So we have another squeeze developing in the Bollinger Bands. Obviously, it could go either way. Bollinger Band squeezes don't indicate the direction of the continuing motion of the market or movement of the market. But since we have so many indicators still indicating an uptrend, it's likely that we're going to continue to trend up from here. Jerry Appel's sum of the rate of change indicator is above the 4% line, although it's trending down a bit, as we saw when last week we pulled back a little bit to consensus of value. And MACD is still in bullish territory, and percent R, as we saw, is we're in bullish territory. So this is another look at the daily chart of the S&P 500. It still looks pretty bullish. And let's see what NASDAQ looks like on the weekly chart. We saw previously that we had an ABCD triangle, and we broke out of that range, and now of that triangle, and now we have a doji, just as we saw with the weekly chart of the S&P. So there's some uncertainty here. Some people taking profits, but I don't believe there's much to be concerned about. We might get a bit of a pullback, a further pullback closer to the instantaneous trend line, just as we saw on the S&P. Nothing else is really new here. RSI 12 is still above 60%, in fact. So since this uptrend began here, crossing above 40, we're still in a very strong uptrend. And MACD below here is still in bullish territory, as it entered bullish territory a week or two ago. So let's take a look at something else. Here's the SSO chart, the weekly chart that I use to trade SSO with, and I'm still holding SSO. We're now at a 200 point level here, 200% level, and so that's pretty high. And you can see that once we got there, the market pulled back. Previously, the market pulled back. Will it happen again? Possibly. We saw earlier that it's likely that this thing can pull back closer to the instantaneous trend line, as it often does, as it often does. So we'll see if we get a continuation of the pullback. And if that's the case, as I saw on the daily chart, could be another nice buying opportunity to add to positions, or if you haven't entered anything recently in the market, might get another chance. Now here's stock charts, the S&P weekly chart on stockcharts.com. A couple of things to note here. First of all, it shows us that the weekly chart is now having green bars, so we're allowed to buy the S&P, at least, the index, okay? Now, at the bottom of the chart, we have Elder Force Index. It's a 2-period or 2-week force index. It's above the zero line. That's fine. But at the top of the chart, there's some reason to be concerned here. First of all, it seems that we have unless we get another rally further up and take this MACD higher than this level here, it appears we have a bearish divergence of MACD right here on the weekly chart. So we ought to be cautious here. We might want to tighten stops. If we have some stocks we feel we might want to take profits. It's up to you. But keep an eye on the weekly chart of of the S&P and take note of the possible bearish divergence at the very top. Let's take a look at the daily chart. The daily chart shows that pullback as we had here. We seem to be having that pullback here. Okay, so we now have the possibility here of a pullback on the daily chart, showing on the daily chart. We might come below the 9 EMA here, okay? So that's where we might end up, below the 9 EMA before we make another drive up. And as I said, when we looked at the weekly chart, a little bit of concern here, somewhat it's possible we might get a pullback. Here's another chart from stockcharts.com, and what I want to show you here is that on this chart we see the percentage of stocks above the 200-day moving average on the S&P 100. Okay, and right now we can see that it's at 79%. That's pretty bullish. All right, so that's all for this weekend. Have a nice weekend. We'll try to do this again next weekend. Have a wonderful day and have a Merry Christmas. Happy whatever your celebration is, but Merry Christmas to all of you.